Welcome, everyone. Happy Tuesday, 25th of October. Welcome to today's episode. We have quite a few exciting topics to discuss. Obviously, we're going to discuss what's happening at the company, Cake DeFi, quite a few updates to share. We're moving into a new place. We have a few exciting social media updates. We have a really cool promotion going on at the moment, Cake Busters. Discuss that. Obviously, we're going to discuss markets. We've had a very calm 2 weeks so far, and we're going to look into at what point is volatility maybe coming back and in which direction. And then let's see. We have a couple of other things on our list. We have inflation in Europe with gas prices maybe going the exact opposite way than we may be expecting. We're going to look at some statistics on how long inflation could actually last. We have US regulation with Sam Bankman-Fried. Maybe this is something to cover. He's gotten a lot of, slack on social about his opinions on there. I want to share maybe a few thoughts of mine on there. And so we can see where this entire kind of journey takes us, how much time we have, and then we can discuss this a bit. We are doing these episodes on a weekly basis, always on Tuesday. We're streaming them live on Twitter as a space if you're listening to that live. And then obviously we're recording and posting it on YouTube as a podcast and all the good platforms. It's always myself, CEO and co-founder of Cake DeFi, and our head of community, Fabio. How's everything going? Tell us a bit, how has the week been? Last week you had to do it yourself. I was completely flat. I was half dying. You covered really well. What's been going on?
Oh, I'm very happy that you're back, Julian, amongst the living. It was actually a relatively uneventful week, and you could say the same about this week. Also, that's what the title of this space is called, "The Calm Before the November Storm," because right now, as you've seen, like the price action is like 120 days in a row sidewards. I think we are about to break the record. There were a few other times when we had extensive sideways price action, but we are about to hit, or we already hit the record. I'm actually not 100% sure on that, but the price action is super boring. Engagement on social media and also in community are at an all-time low. I guess people are just focused on other things right now.
Prices are flat. I mean, look
Yeah,
over the last couple of days. It's been really uneventful.
definitely. And usually in crypto or in Bitcoin, this is not the norm. So I think they were right now, just from a measurements perspective, over the last 2 or 3 weeks, there is less volatility in Bitcoin than in the S&P 500 and then that in the Nasdaq, which is not normal. And usually, if we have these extended periods of sideways action, we kind of the price gets squeezed, and there is usually a violent breakout to either one side. And this correlates, by the way, with a few other things, like, for example, minor profitability. I don't know if you want to go into that.
Yeah, we should when we talk about markets and what's happening. But definitely a bit of a quiet before the storm. Why don't we start with a little bit of Cake DeFi updates? I think first and foremost, we're having a very exciting Halloween promotion going on. It's called Cake Busters. It's really focused around you as a community. The gift that we are giving, if you are winning in that promotion, is really exclusive. It's going to be an exclusive Cake Buster swag box. You're not going to be able to buy that. We already had team members who saw that promotion like, hey, I also want to have such a swag box. That's so freaking cool. It's going to be a very, very exclusive kind of status symbol. And the way to participate is very simple. You need to follow us on the various social media channels. So I've pulled up here one example on Twitter, but the same is going to go out on LinkedIn and Facebook. So you should definitely be able to follow that. And you need to collect all the letters over the next couple of days. There's 5 ghosts that have infiltrated our socials. And if you spot them, you collect the letter. And at the end, you're going to have a word out of obviously 5 letters. And then you can enter, and then you can win. And you can win one of those really, really awesome swag boxes that are going to be themed around the Cake Busters. So no chance of otherwise getting that. It's going to be quite exclusive, as you can imagine. There's very, very few, and yeah, let's see how you enjoy that. If you click on the link here, then you can see the various ways to enter. There's you log in. One key thing, in order to be able to participate or win, you have to be a KYC customer on Cake for a very simple reason, because we have to be able to send you that swag box, and we have to know that we are interacting with a real person. And so that's the only requirement. But other than that, yeah, it's all about building community and seeing who are the people who love us the most in all of that. I'm actually quite excited about that promotion. Fabio, your thoughts on that?
Yeah, just the post for today is actually just a heads up. So you can already start to fill in certain things from the promotion, but you will need the 5 letters that we will be posting over the coming days. This is, of course, we have Halloween coming up next Monday, and this is our Halloween themed promotion. So just make sure that you follow us on all the socials. You will see 5 of these images with letters in them, and all of them, they will give you a word. And you will need the right code word to participate in the promotion. And maybe just as a small additional information. So we have the VIP perk swag box that is coming soon since quite some time. We're still doing that. And Wayne, he does CRM and marketing, and he confirmed that we are looking at a timeline of Q4. But the swag box here, the 5 swag boxes that we are giving out, they're even more special than the ones that the rest of our VIP customers will get, because there will be a limited edition. Only 5 of them will ever be made, with very special graphical designs and templates on them. So yeah, definitely make sure to follow us on the various socials, and keep looking into them over the next 5 to 6 days to find out the code word.
For sure. And then, yeah, next week, there's 2 big things for us happening. First and foremost, we have our new office. We're moving into a new office. I don't know if you have seen our COO, Glenn, talking about this on LinkedIn and Twitter and Facebook. Yeah, it's going to be quite cool, because I think it's always a big moment when you actually move into your own place. The office has space for around 150 people. In total, at the moment, we're 160 team members, but about 100 of them are in Singapore. Yeah, we definitely have some room to grow there. It's going to be in the 7th floor. For me, it was really important to have a nice own place. It's right next to Raffles Place, if you know a little bit in Singapore. So that's yeah, kind of the view. So it's a nice kind of office, but there's definitely still as a space to step up, and that was important to me. From a kind of feeling. You're also going to be able to visit if you want. And yeah, that's going to be quite exciting. That's going to be an entire process next week. Yeah, a lot of discussions and debates. As you may imagine, we also had a lot of filming done. So hopefully we can have some yeah, nice stories to share with you a bit later down the line, how everything went, if everything went smoothly. Yeah, so that's going to be definitely really cool. And then the second thing is next week, Singapore FinTech Festival is happening next week, 2nd to the 4th. We have a booth there. We're going to be launching a really exciting B2B product that we're going to announce there for the very first time. So yeah, we're going to cover that not next Tuesday on the show, but we're going to cover that in 2 weeks as a summary on that. But that's going to be a quite unique product. I'm not aware anyone else offers such a product B2B, and that's going to be quite cool. A lot of you may have been wondering about all this, but that's going to be fantastic. I will be speaking on 2 occasions there. Both are on Friday the 4th. One is a TED-style special founder stage where 50 of the most successful founders will be speaking. It's going to be more of a TED Talk kind of style. The headline there is from near death to $1 billion company. So I'll talk basically about the starting of Cake DeFi together with u-zyn and how we build all this. And then the second one will be a panel discussion around DeFi, around regulation, around welcoming open ideas, and that's going to be on Friday afternoon. So if you're there, drop by. Will be very exciting. And then obviously the TED style kind of thing will be that's going to be just like in TED. It's going to be quite. They're going to record all that and prepare all that. I'm not sure about the panel discussion if that's going to go if that's going to be streamed live. I'm not sure. But we'll definitely have someone from social media there and record a couple of snippets. So yeah, that's going to be quite nice. I don't know if any comments from your side on this, Fabio. But otherwise, I'll just continue. But yeah, let me know.
Please go ahead.
Yeah, we're also verified on Twitter. That's amazing work done by the team. So be sure if you're following the Cake DeFi account on Twitter that it's the verified account. Super straightforward. I mean, the same applies to my account. There's I don't know how many scammers around my account and then a Cake DeFi account. So just make sure you're following the right accounts there. That was quite great. And finally, we have that. Also, our chief legal officer, Daniel, just got recognized as Asian Legal Business 40 under 40, always hiring the best. So that's yeah, quite nice. And obviously, talking about hiring, I hope you have looked on our careers page. We have quite a few open roles. I want to shill a few of the open roles simply because we're really growing and we're really looking for people. Obviously, always looking for blockchain developers, C++, always looking for engineers on the JavaScript side, backend, front end. So doesn't matter if it's on the R&D side, on the Cake DeFi side, that's always on JavaScript. Marketing, that's the reason I'm shilling that is because I need to do way too much there at the moment. Chief marketing officer, I really need someone there, have solid strategy, work on with the entire marketing team, willing to expand the marketing team. If this is you, please apply. That role is in Singapore. The other role I want to highlight, head of social media. Definitely needs strong crypto experience, strong understanding of the various channels. Yeah, same thing. Preferably in Singapore. Doesn't necessarily have to be in Singapore though. And the other one that's going to be a very key role going forward is VP of Content Strategy. That's kind of the overarching strategy, everything content, video, podcasts. We want to focus a lot more on this right now, especially during the crypto winter. That's always a time where, yeah, you want to be extra useful to you as the audience with really great content, with great entertainment, inspiring content, deep dives, great snippets. So if this is you, then I think would be very, very important. Actually, the VP of Content Strategy doesn't necessarily need to have so much crypto experience, needs crypto experience, but here the more important skill set is really great storytelling and really understanding how content should tie in with the company. So that's absolutely key. And then we're looking for a receptionist for our new office. That's obviously Singapore based. So that's key. And then on the HR side, it's either or a senior HR business partner or a VP of people. Both is okay. So if you have experience in fast growing startups, then yeah, please apply on this. Both roles have to be in Singapore. On the product side, we're always looking for product managers, constantly growing. Fabio, you are looking for a community manager, right? How's that role looking? I mean, that role doesn't have to be in Singapore. I know it's written out here as in Singapore, but this can be remote, very likely actually to be remote. How's that role doing?
Yeah, we're actually already in late stage hiring. We received a lot of applications and several really, really good candidates. We might be able to finish the hiring process this week. So if you're still interested in working as a community manager, hurry up. You probably need to submit your CV by the end of the day or tomorrow. Otherwise, we are in late stage for that position.
Cool. And last thing I have, at least on the Cake side, is our Razer Silver giveaway that we're doing in partnership with Razer. Yeah, very, very large gaming company here in Singapore, and we're good friends. And yeah, so we're doing a partnership together, some cross marketing. So if you have not seen Razer, check them out. And obviously, if you're a Razer user and you haven't seen us, which is unlikely listening to the podcast here on our side, but still, then check us out and yeah, see the combo packages that we have. That's it on my side when it comes to Cake updates. With quite some exciting stuff going on. Again, really check out the Cake Busters promotion. Yeah, we're gonna post this a lot over the next couple of days, and yeah, we really wanted to focus on the social media promotion here. So it's not so much tied to you having to spend money on Cake or using Cake. It's really tied around you as a community member. And then also simply because you see a lot of those very short-sighted, mercenary type people at the moment that are just trying to rip uh, uh, off any kind of promotion. So here on purpose, this is really around swag, around building strong community. So that this is for you as a Cake DeFi super fan, and not for just someone who wants a quick $50. Very intentionally designed that way, and I hope you appreciate that. Anything that we forgot, Fabio, that we left out, that you feel we need to mention around Cake DeFi community?
The only things that are the things I mentioned previously in last week's Twitter space. So for us, it's going to be a super strong Q4. We have a few exciting things planned. There will be other promotions around Black Friday, Singles Day, so mid November-ish. We will have a little bit more planned. Just follow us on socials. We will keep you updated there. We're looking into bringing new staking coins to the platform, also planned for Q4. We have a redesign, a lot of exciting things. And as always, as you have been with us maybe last year or the previous year before, we have a little bit of a slowdown at the end of December. This is just the last 2 weeks, but slowdown doesn't affect you in any way as a customer. It's just for us that maybe the only thing that will affect you is that a support ticket might take 4 hours instead of 1 or 2 hours. We currently have an average response time for support tickets of about 70 to 80 minutes, which is great, especially if you're used to other companies in crypto, like, for example, Coinbase, where it's normal to wait a few days to receive an answer. So shout out to our amazing customer support team here. But that's the only thing that might affect you, that the withdrawal or a support ticket is going to take slightly longer than usual. But we are super excited for Q4 to finish the year off strong.
Great. One last note that I want to make here is from next week onwards, Europe goes in a time difference. So if you're listening to this from Europe, just be aware that this is going to happen 1 hour earlier from next week onwards. We're going to stick to Singapore time, and Singapore doesn't have uh, any kind of daylight saving time, so we're going to stick to that. Europe changes their time next week. I think the US is going to change a bit later, so US still stays. But Europe from next week, the live is going to happen at 11 a.m. next week. Just wanted to make this as a quick note. Great. Let's go into markets. First and foremost, where's my slides here? Here. First and foremost, crypto, and I mean, I think you've been feeling this, has been relatively range bound, relatively low volatility over the past, well, 3-4 months, almost since it hit that low in June. Then kind of recovered here July, August, and then since then it's been more on the lower end here, always trending just slightly above the 19,000. The low here was somewhere between around 17,700 or something. So never really got that close. But so obviously people are getting really a bit worried. They are like, obviously there's all these kind of memes where no one ever lost money holding Bitcoin for at least. And then, yeah, people always said it's 4 years, but that kind of got slaughtered. And now we're knocking onto 5 years because, well, very obviously, if we're going into 2023 and we're staying at these prices, there may actually be a time when people actually were in the minus, right? So at least that door kind of breaks down, and people are then saying, well, basic human needs. It's not only about physiological needs as air, shelter, water. It's actually a bull market that is the absolute base to all of that. Very interesting in comparison, and we're going to go into that a bit, is well, stocks have done a bit different. And we've actually seen stocks, especially the last 2 weeks, have had a bit more of an uptrend. S&P 500 did quite well. And so the question is, where's this coming from and why is this happening? And the few kind of ideas on that is, I think it's not so much that stocks are doing well. It's more on quite expected. Stocks have had relatively good earnings for Q3. And so it's again that same kind of phenomenon. Oh, it's actually not that terrible. And so it's terrible, but it's not that terrible. And so stocks are kind of rebounding a little bit. I don't think this bounce has that much of legs. I think it's gonna at the end go relatively flat as well. But that's maybe where a bit of that separation is coming from, that crypto and stocks are seeing, or the general markets are seeing. Now, obviously, we do have quite some hopium out there. Fabio mentioned a couple of things here. Maybe you want to share those two. I think that graph I added in the miner revenue per exahash. We're seeing like all-time high hash rates, and we're seeing actually all-time low here profitability. And then talk a bit about that, and then talk a little bit about the seller exhaustion. This is something that you have shared, but maybe you want to kind of go in that a bit and share a bit those two graphs that we can
Yeah,
share. Maybe, yeah, and then I can share a bit about balance on exchanges, which has also been dropping.
yeah, I would love to. There is three factors that determines the profitability of the miner. Of course, they invest hardware, they pay for electricity, and you have a competitive element, which is the difficulty adjustment. So how difficult it is, how many other people that are mining. And so over the course of the last year or so, Bitcoin dropped by 70%, which is the value per coin. But while that was happening, we saw the hash rate making new all-time highs. And it's important to understand why this is happening, and how miners are affected by this. So mining is not as straightforward of a business model that people are giving it credit to. So a lot of miners, they actually need to manage their finance and their orders into the future. So if you order like the XP mining machines, the new ones, then you have like a waiting time of 6 months. So a lot of people, or a lot of miner companies, especially the public one, we actually know when they ordered hardware. So if you have like Marathon or Riot or Hub, like the big American miners, they're publicly traded company, and we actually know a little bit what they're doing. And they didn't really take profit when the Bitcoin price was high, and they kept a lot of Bitcoin, and they were financing their operations by raising capital. And they ordered a lot of hardware when the hardware was super expensive. They needed to wait for 6 months, sometimes longer, until the hardware actually arrives. And now they're putting them online. But the prices are a lot lower than they were a half year or a year ago, which means the competition is just insane. So you have miners that are getting squeezed out of the market. And of course, they can say, okay, we have enough capital to fund our operation for another year or 2 years without raising other capital, or they raise more capital and they can continue their operations, which means they are not getting squeezed out of the market. But you definitely have miners that didn't do proper risk management, and right now their margin is at an all-time low. We never had per hash you're generating, you're never gotten this low value out of it. And usually when this happens, you can see it on the chart if you're following us live, but I can just try to explain how this looks. But usually when the price of, so the hash rate compared to price is low, which you can see in the graph below, then you have capitulation happening. So usually this happened in December of 2018, for example. You can see a sharp drop off in miners, and these are just miners that say, hey, we cannot no longer sustain our business, we are not profitable anymore. So they need to sell their hardware, or they need to liquidate, or take some hash rate offline, or just shut off the electricity. There are several options, but this can be happening. So and I think it's fair to say there is two options right now which can play out. One thing is, we have seen the bottom, and from we there is upwards movement from here, which would like ease the stress on the miners. And the other thing is, we're going even lower from here, and we see capitulations, especially that miners which hold big reserves, they hodl their Bitcoin, and if they need to start to liquidate those positions, that can actually lead to lower prices. So it's we are at a very interesting point. I would probably compare the point where we are right now similar to December of 2018. It doesn't have to be the same. We don't need to drop 50% from here, but there's definitely a chance that we're going to.
Yeah, I think really good points. Again, very key. I also posted that on Twitter. I think people, especially on charts, sometimes struggle with that a bit. Charts from the past or graphs from the past can only be used for the presence to make predictions about the future if the environment or if the circumstances are very similar, right? I always use that very simple example. Imagine you're sitting in a cave, you cannot look out. Out there, there's an asteroid coming down, kind of wipes out the entire world, and all you see is a graph on the stock market, and you see that prices are coming down, and then you see the announcement that the Fed is trying to do any kind of stimulus, and you're like, oh my goodness, like stock market must be rising pretty soon. We're going to see a V-shaped recovery, and you don't know that out there the humanity is going extinct, right? So obviously this is the super extreme example, but I just want to use that super extreme example to kind of highlight how um, the past doesn't always repeat, it rhymes, and you need to have the right kind of circumstances. So I think that's I just want to highlight that as a whole. There are a couple of things. Sometimes they look good, sometimes they are a bit misleading. I want to show that a bit. People love to show exchange balances and love to show how exchange balances here in orange have been really going up and then going down. The reason why I think that's super misleading, and I know that a lot of yeah, you sadly see this a lot in pseudoscience as well, in order to convince people to take certain action. What's so misleading about this is when you look at the y-axis. And the y-axis is not in an absolute axis. So it's in a very relative axis. So it kind of shows just a super tiny slice of what's happening. And so it kind of misleads you into believing that there's like a massive spike up in liquidity, and now there has been a massive spike down. As a whole, this is like, these are super tiny swings, right? And so sure, I mean, it still swings. It's not that there's anything like not legit about this, but it does not really matter if those swings are massive or not right now, just because the main issue at this very moment is not supply. I try to kind of share this all the time. I talk about this. I mean, one graph, so this has nothing to do with Bitcoin, but it's this ultrasound money kind of graph, right? And a lot of the Ethereum fans, and look, I'm a big Ethereum holder, so I would love that this is exactly how it works, but I want to be super realistic. So a lot of the Ethereum bullish, the Ethereum fans that are, again, like you have the Ethereum maxes, you have Bitcoin maxes. These are many times people are just not like rational. And a lot of them just say, look, the Ethereum supply is now ultrasound because we're soon going to have a deflationary amount, and that's going to be so bullish, and the price of Ethereum is going to explode because of that. The key thing to really understand in all of those things, right? Supply only matters when people want something. That's when supply matters. When no one wants something, or very few people want something, so when demand is the issue, it doesn't matter how rare something is. It's really all about the people not wanting something. And we see this at the moment in crypto. We see at the moment in crypto that there is just a lack of demand as a whole, right? So arguing on the supply basis, arguing that Ethereum is ultrasound and that the amount on exchanges is dropping this little bit, it's completely irrelevant when you actually look at how non-zero balances are changing. It's completely flattening out. And it's even, if you look into, like, and Glassnode has some really good statistics on that, if you look at the momentum, right? The momentum we're seeing right now is actually really, really bearish. It just shows that there's just not a lot of people at the moment who actually want to get into crypto. And those people that are in crypto, they don't want to top up, they don't want to add much additional funds. So I just want to highlight that the main argument that you would have to show at the moment is, well, people suddenly getting interested in crypto. And you can, I mean, look here, Bitcoin, Google trend, right? So you can just look this up. And then, like, we are as low as it can basically be, right? So just people have zero interest at the moment in getting into crypto. And so that is just the absolute key. You can then look at apps, you can look at app downloads, right? Compare those on Coinbase or on Binance. It does not matter what you look at. it's not that supply is the issue right now, it's demand, right? And so that demand is the reason why all the crypto projects have issues with their price right now. So arguing that Ethereum is ultrasound now, and that that's gonna take over now because I don't know where they have that comparison. Yeah, so here's the comparison to Bitcoin, right? And so they're like, you look at how Bitcoin has an inflation of 1.7% per year, and Ethereum is basically zero, and it's probably going to go negative, and that's why Ethereum is going to do better. If we were in a really strong bull market right now, I would completely agree. But the big difference is we're not. We're in a crypto winter. And during crypto winter, supply does not really matter. What really matters during bear times is demand. And that's the lack of demand that really is the key. And so just focus on the right statistics, right? When you try to kind of make predictions about the future. And so right now, you really need to make predictions about how and when is demand for various cryptocurrencies going to go up again, right? So when do people need more Bitcoin again? When do people need more Ethereum again? When do people need more DeFi chain again? These are the kind of questions that you need to ask yourself right now, not so much what does the supply actually look like. So the halving with Bitcoin, right? That's going to be an interesting topic, 2024. The question is not so much is the new supply coming down, because actually the difference between the current supply that's happening with every block is not so much different than the halving after at the end of March 2024. But what could really change is the momentum. It could change that we suddenly have this excitement, and that could actually be a big difference, right? So I just want to highlight that when you try to make predictions for the price during these times when people are not so interested in crypto. I don't know if you want to add anything there, or if you have anything to add here,
Yeah,
Fabio.
maybe some dubious speculation or some conspiracy twist to that, just because. I'm 100% supportive in everything you just mentioned. The twist I want to add is, like, if I just look at Bitcoin isolated without any macro around it, I would be 100% convinced that the bottom is in. Like, it just, from all the data, how the chart looks, how everything feels, but there is like this shadow from the macro landscape hanging above us. And I feel, and this is just dubious speculation, and I feel this affects people in a certain way. So if you look at any polls or sentiment in the broader crypto space, everybody, every influencers, their little sisters and their friends, everybody's bearish. Like 70 to 80% of the people that participate in crypto, they are bearish. If I ask anybody within the community, within the company, friends of mine, all of them expect lower prices. Some of them are looking at 17K, 15K, 12K. You hear all kinds of different numbers out there. But usually, if a large majority of people expect lower prices, it's probably not happening. And if it's happening, congrats to everybody that is setting up their buy orders and that is actually able to scoop up at lower prices. But just one thing to consider. So usually we have this long period of sideways actions, which squeezes the price into a very, very small area. And usually out of this, there comes some momentum. So it's like a spring that you press together, and the more you press it together, the harder it will spring. And there is a potential that this will go to the downside. There is a potential that this will go to the upside. But in either one of these cases, there is capital on the sidelines just waiting for these movements. So if we are going down, there is actually a lot of capital waiting to scoop it up. And if we go up, there would be a short squeeze, and a lot of people that would think, oh my God, maybe this really was the bottom. Maybe we are going higher from here, and then we will see some momentum. And one thing, just very dubious speculation, is the markets that we are in right now are a lot more sophisticated and smarter than they have been 4 years ago or 8 years ago. And what I'm expecting to happen this year is that we will see a strong front running of the halvening. Like a lot of people, they say, okay, 2023 is probably going to be a bearish year. It depends where we finish off. Like if we finish off this year below 20,000, 2023 is definitely going to be a bullish year. Probably not all-time highs, but I can foresee 2023 finishing off at 40K, 45K, something in the normal range. and people may be anticipating or front running the next halving event. What does it mean from an investor's perspective right now? Is you just need to ask yourself the question: are you in this for the long run? So are you willing to hold these assets for 4 years, 5 years, 6 years? Then the prices we see right now are great prices. Maybe we will go lower, okay, and you will be able to scoop up some at 15K. But with all the things that are happening with institutional adoption, like and proper regulation coming to the markets, the prices right now are great prices to buy. Place some buy orders just in case if we go lower. But yeah, it's so hard to foresee what is happening. And maybe we can also touch into a little bit of the macro related stuff. Maybe that there will be some deflation, the midterms, maybe, I don't know what the Fed is planning to do. Maybe you
Yeah,
have some
let's
insights there, Julian.
let here. I mean, it's an interesting overlay. Basically, just copy pasting what happened in the past cycles, and basically overlaying with those with the current cycle. And just like Fabio said, I mean, if you just look at repetition, right? So you ignore all the macro stuff, and you kind of like, you know what? Also in 2018, people were kind of a bit bearish. We did have a little bit of some flutteries in 2014. So maybe it's not that bad, right? I mean, it's always going to recover. And I mean, we've had this kind of shit show for the last, whatever, 10 years. People called the death of the dollar for the last 10 years. We've had issues in Ukraine already. We've had, I don't know, tensions between China and the US, Russia and US forever, right? We've had other elections where there was constant kind of issues. We've had challenges with the Fed all the time. So if you kind of say, you know what, it's just another one of those, then and you just overlay that. I mean, you can see that. Well, it's very likely that over the next 6 months ish, kind of, we're gonna keep dancing around the 20,000 mark, right? So again, that's not me predicting. This is just kind of an overlay here, right? You can do this yourself, and then that's just past cycle overlaying, right? So it's copy paste, and then someone like a year before the halving, which is reasonable if you think back 2019, also a year before the halving in 2019, we suddenly had this run up, right? And then there was this kind of came down again, and then you had to wait a little bit, and here we're dancing around the 30 45 30 to 40,000 mark, right? So that basically means that next year after this reset, we could see 100% gains again in Bitcoin, right? So maybe next year we finish the year, let's say, at 20,000. Again, it's just what this kind of summary here is. And then, well, we see like a year 100% gain again, which is like this typical kind of Bitcoin pump, right? 100% generally is like when Bitcoin pumps within a year is 100%. And then we have that halving rally. And let's see, that could then basically mean that we would see in 2024 maybe a new all-time high, right? So that's based on just past cycles. Maybe for those that don't want to wait that long, why is everything so calm at the moment? Well, this is the economic calendar right now. It's just end of the month. There's not much happening in the US, and the US really dominates the entire kind of story. But getting true to the title of the video, right? Or the episode, November is going to be juicy, believe me, right? November is going to probably melt our skins off in what's going to happen, because we're going to have three major events within 1 month. Well, it's all going to start with the Fed, and that's going to start on November 2nd. So that's actually next week. And the key thing here is not so much the interest rates for next week. It's very, 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 very likely that the Fed for next week is going to go with 75 basis points. I don't think that there's many market participants that are going to see much of a surprise there. So it would be super surprising if we see only 50, or if we see a full percentage raise, so 100 basis points. I think very unlikely. I don't think many people doubt that. I think the biggest thing is going to be the signaling of the Fed for the future, because we do see for the very first time where certain Fed officials may be signaling that this is kind of it. So we've done enough. We do believe that things are going to come down. So that's kind of a bit the narrative here. And we discussed this 2 weeks ago with Fabio, where there's a lot of people who say this could be the last rate hike that the Fed is doing in this entire cycle, right? Maybe it doesn't need much more. So That's going to be a very interesting one. Then 6 days later, midterm elections. Let's look at 535. Where are we in the projection here? Yeah, Senate has really started to shift now. It was quite extreme already, where the Democrats were really ahead. Yeah, here. I mean, it was at 71 to 29, and now it's starting to trend back again. A lot of the reasons here is really the economy. Yeah, that very famous 1992 quote from Bill Clinton, it's the economy, stupid. And I mean, it is. And at the moment, I don't think people are so confident. And that always goes against the party in power, in this case, the Democrats. So, and the House is really strongly favored, simply also because you can vote on all the representatives in the House, where on the Senate, there's only about a third that gets voted on. So that's why it's a bit harder to do any big changes in the Senate. It's going to be quite interesting to see how this turns out. So that's going to be obviously happening. Where's my graph here? That's going to be happening on the 8th. And then just 2 days later, we have CPI numbers for October. And yeah, that's going to be quite juicy. Then obviously 2 weeks later, we have the Fed meeting and analysis in between. Obviously, a lot of discussions. And so November is going to be massive, really, really, really massive. Um, One of the most volatile months that I'm expecting, to be honest. Yeah, I would be really surprised if we are seeing not some massive volatility left and right. Fabio, thoughts?
Yeah. So one thing I'm currently watching very closely, and this is the first time that I'm experiencing this in real life. I read a lot about it in blogs and podcasts and books and stuff, but so there is something that is called the bullwhip effect when it comes to inflation. And if you compare these times to the 70s, we actually inflation doesn't move in a straight line. There is inflation and deflation. And the question that you need to ask yourself, or that I'm asking myself, is it cyclical or structural? So cyclical inflation moves up. So we are at 10% right now, and I can foresee like people like Katie Woods or Elon Musk, or a lot of other people that are actually in touch with the actual economy and are following these commodity prices and production prices and everything. They say we will see strong deflation, and so the question is this cyclical? So practically, are we making a higher high, even though we're going to see a deflationary trend? Consumer prices are coming down, energy prices are coming down, and so on. But the question is, are we going up at a later point, maybe 6 months from here or a year from here? What happened in the 70s? So we had this higher inflation prints, then we saw some deflation, and then inflation picked up again. And this is the question, or the thing that I'm currently probably most interested in, is how is this going to affect us? And also, how is the Fed going to react to that? So let's just imagine that they see, okay, CPI and core inflation is coming down, consumer prices are coming down, and they think, oh my God, we did this. So we raised the rates, inflation is coming down. So they're either going to stop or they're going to pivot, which is, of course, going to affect the broader markets, which means prices are probably going to pick up. And with that, probably also inflation is going to pick up again. So the question is, how are they going to navigate through this time? And also, like in my opinion, there is a structural inflationary trend. So just because of the high service rates for the debt on a sovereign level. So all of these governments, especially in Europe or in Japan, we have such high debt that we need to service the debt. So, and the only way to do that is you can raise taxes or you can print money, and they're probably going to print money. So there is a structural inflationary trend, but there is a cyclical deflationary trend. And this is like, for me, I'm very new to this. It's not that I studied this in any way, but it is something that I'm very closely following. Maybe, Julian, you have some thoughts on that, because you have a little bit more experience in navigating through the macro landscapes than I have.
Yeah, but I mean, again, I mentioned this a couple of times. I'm in the same kind of boat as probably most investors. My investment career started with this genius idea of going into real estate and binary options right in 2008, and I lost it all. So that was my very first experience. And since then, I've just been on this very lucky wave, as probably most of us, where it's difficult to know if I'm a good investor or if I'm just lucky that I was investing over the last 14 years, right? And I think it's very difficult. I think maybe a bit of a difference, where I maybe have gained a little bit of an edge, is just that I have a bit of an easier time not falling for certain emotions, and I have maybe a bit of an easier time trusting certain principles that they're gonna stick. Following value, not necessarily always following price, knowing that when stuff gets too heated, it may be good to turn the other way. And these were just kind of ideas that I tried to implement into the crypto markets. So again, I am, and so most of the things I know are mostly because I just read a lot, listen a lot, try to talk to a lot of people, and that's a bit of so necessarily I really don't have the experience then that some of the people have that I listen to, who really have lived through maybe 2 3 of those kind of cycles at the moment. I agree with you, Fabio, on that. Yeah, on how quick things can transition. A couple of points here. I mentioned this, I don't know, I think maybe almost half a year ago now, or maybe 5 months ago, that I actually could foresee deflation by the end of the year, by the beginning of the next year. And a lot of people start coming at me now and say, like, hey, it's the end of October and we're still seeing all time high inflation. And yeah, I understand that. And it's still not the end of the month, the end of the year, right? Beginning of next year. So I agree actually that this can transition insanely quick, right? I actually foresee, and I don't know how often I mentioned this, that we're going to jump with these numbers, right? So these numbers are not going to go from, I think the last reading was what, 8.1% or 8.2%, I can't remember. I don't think that we're going to see 7.5 and then 7 and 6.5. I think this is going to just completely get slashed, right? So I mean, it's going to be super volatile. There's a very nice kind of comparison over past inflations, in this case the 70s, right? How long this actually took and how up and down. So what you're saying here, Fabio, could actually be super spot on, right? So we shot up, we may go down. That's that deflationary counter. Then, well, we're lowering interest rates again, right? Then, whoop, it shoots up again, goes down, shoots up again, and then at some point, we're finally going to see that very kind of last slash. So, yeah, you could be spot on right with that. Sorry, Fabio, go.
Yeah, just maybe, you said how quickly these things can shift, and just look what happened here in Europe over the
Yeah, I have
last
the
seven
graphic here.
days. It's crazy. So for everybody that doesn't see what is on the screen right now, so we have natural gas prices, which like had an increase. They 10x here in Europe. We are paying insane amounts for natural gas, for our energy, for our heating, and so on. So Europe, they've been buying gas like crazy. We have these storage places, mainly in the Netherlands and in Germany, where we store liquefied natural gas for the winter. And those storage facilities are at 100% capacity. In Germany, they think it's 97%, so almost full. But everybody's aware that they can sell gas with very high prices to Europe. So there is ships queuing outside of Spain and France filled up with liquefied gas, and nobody is able to buy it because our storage facilities are full, which made the price of natural gas turn negative. So you got actually paid to receive gas, which the same thing happened to oil, I think in 2020 or 2021. I don't even remember, during when that whole Evergreen ship got stuck in a canal. I
Yeah,
don't remember the year,
that
but
was 2020.
2020. So right now we have like the shortage of gas, or yeah, we have a shortage here in Europe. We have really high prices. Prices are about to increase 50% just a few days from now in November. But while this is happening, there is actually a short oversupply in gas because we cannot store it and we cannot go anywhere with it. And these things, they can turn instantly. So the prices go from 10x to negative, and probably now they will be picking up again. But the same goes for other commodity prices. And if Julian says both of us have been talking about a deflationary cycle maybe at the end of the year, that's still very much on the table. It can turn, maybe it's also going to be Q1 next year. Nobody can really date this to perfection, but a deflationary trend where we actually see you know inflation dropping by a big amount, like much more than most people anticipate, it can happen very fairly quickly, because especially if commodity prices like natural gas or copper or things that we are using every day, if those prices drop, then there will be a deflationary trend. So it's very exciting to see how this will develop until the end of the year, or maybe into Q1 next year.
Yeah, I fully agree. I want to put up a gentleman that I know not so many people in the crypto space like, but I still appreciate him very much. Warren Buffett: the market is a device for transferring money from the impatient to the patient. And I think this, yeah, is very, very, very true. So yeah, I think right now especially, it's a time where I agree with Fabio. If you have a long-term view on this, which I hope you should, and I know that a lot of our customers do, then these are great dollar cost averaging times. I personally actually don't see as much downside, but I also don't see much upside at the moment. And I think that's what's the kind of pain for a lot of people, right? That's why people hate that waiting. They want to see some action, right? They don't want to open them. Like, you go on CoinGecko right now and it's just flat, right? You look over the last 7 days, it's flat. You look at the charts, the last couple of months it was flat, right? People at some point, they're really like, oh my goodness, just let me wake up and do something. I don't know if you saw that really hilarious. I think Cointelegraph really nailed it. Did you see that with Tim Cook in Austin waving for the Formula One? And he was like, waving like this, and then Cointelegraph posted Tim Cook acting like like with the same enthusiasm as the Bitcoin markets, and I thought it was hilarious. Let me just see, maybe I can pull it up really quick. But I mean, I think that is really the massive issue right now. I hear it's just so fucking funny.
But I guess the fun thing is we are all waiting, kind of, what is going to happen in the macro landscape. Is there a crack in the system? Is there something that is going to blow up? Is there another rate hike? We're consistent. It's just waiting and
I
waiting,
mean,
and oh my god,
Tim
the
Cook's
enthusiasm is.
enthusiasm is waking up to see Bitcoin's enthusiasm. Yeah.
It's actually pretty good.
I thought that's really good. Yeah, Cointelegraph really nailed that one. Yeah, yeah, but I mean, and I think that's gonna be the picture, in my opinion, right? That we're gonna see over the next probably 6 months. I I'm also of that belief that most people that sold, like that wanted to sell, sold. I think there's just a lot of people right now that are like, you know what, I'm not going to sell right now. And there's just also a lot of people who are saying, hey, I'm not going to buy right now. And so right now it's just going to take this waiting. And so the key thing during these really boring times, right, is dollar cost average. Don't stop the dollar cost averaging. That is absolutely stupid. It, for some funny reason, people always stop the dollar cost averaging during those times when they actually should be. And in the long term, I think these are great times for dollar cost average, right? So that is key. The second thing, um, stay informed, stay updated in the space. I understand you're not going to be with the same excitement opening Cointelegraph, CoinGecko every morning. It's like, oh, great, where's the markets going, right? Because you're not going to get that dopamine release. But understand that you need to stay like fresh and hungry and keep learning. And I think that's key. And then obviously, if you get cash flow during those times, it's this auto compounding that you want to do, right? And so and I mean, we see this. We see this. I think there's going to be this update coming out that we've paid now this year $400 million in rewards or something. So absolutely bonkers numbers. And so yeah, and that's why I think getting cash flow in crypto is some of the best during those times, because you actually auto compound. So yeah, these are the key kind of things I want to leave you with here at the end. I don't know, Fabio, if you have anything to add, coming to the full hour.
Um,
So I thought it's perfect, but I don't know if you have anything to add here.
the only thing, and I can't stress this
Somehow you're
enough.
muted, or I can't hear you anymore.
Oh yeah, sorry about that.
Yeah.
The only thing, and I can't stress this enough, is my fight that I consistently have with like my brother or good friends or family members is um, the part of the equation that is personal finance in that, because um, just just be safe. If you have a steady income, good, but also keep 3 months or 6 months or a year of fiat on the side. Just maybe there's something happening, your car breaks down, your wash machine breaks down, and you don't want to be liquidating your Bitcoin position or your crypto positions, the assets you're planning to hold for several years, just to buy. And then you need to sell at, I don't know, 15,000 Bitcoin level. If there is a drop and you don't have this cash on the side, then you actually need to liquidate the positions that you're planning to hold for several years. So yeah, in my opinion, one of the most important things is personal finance in order. And it also helps with the emotions, that you're actually able to stomach the volatility and to hold on to positions for multiple years. So for me, the calculation or the expectations that I have for next year is, um, I'm expecting the Bitcoin price to be around 40,000 at the end of 2023. So my expectation for this year is probably around 20K, maybe lower, maybe higher, and for the next year maybe 40K. But the year after that, there's definitely a nice profit to be made, because within the next cycle, whenever that is happening, before, after happening, or whenever, I'm 100% certain that we will see six figures. Not financial advice, just dubious speculation. But yeah,
Very dubious speculation.
there is this meme, where a bell curve meme. So you have like all mapped out, and the people at the lower end of the bell curve and the people at the higher end of the bell curve, they have like stick to the plan to achieve all your goals. And the people in the middle is, oh no, you cannot stick to the plan, you need to reiterate it and you need to change it all the time. But with some things, especially with, like, if you have a high conviction, if you actually said yes to an investment, and if you made an allocation and you have all the things in order that Julian just mentioned, your personal finances in order, why not just stick to the plan? You made an agreement with yourself that you're holding an asset for 5 years or for 10 years. What changed? It's just right now the emotions are very different, because last year, if I would make a poll and just ask people in October of 2021, what is your investment time horizon? Bitcoin price was at 55,000 or so. You asked people, what is your time horizon to hold this asset? A lot of people would probably say 5 years, 10 years, easy peasy, I'm in profit, all good. If you would ask the same people right now with a Bitcoin price at 20,000, I think the results will be very different, just because of the emotions that and the current price levels. Yeah, that's
Very good points. Very good points. Thanks, Fabio. I hope you get value out of this. If you do, let us know. Leave us a review. Leave us a nice comment. Share the episode. And then next week, don't forget, we're an hour early if you're listening live on Twitter. Obviously, the recording here on YouTube or wherever is going to come out as soon as it's ready. With that, stay safe, stay healthy, great decision making, and see you next time. Thanks so much. All the best from myself and Fabio. Bye bye.